Welcome to the premium video newsletter for July 17th, 2013. Starting with the fundamentals, we had the June housing starts decline 9.9% to 836,000, which compares to the estimate that was a 5% gain to 960,000. So as you can see, the numbers were very off. Building permits fell 7.5% to 911,000, when a 1.5% decline to 1 million was anticipated. So once again, the numbers were not very encouraging, to say the least. The biggest anticipation of the day was Federal Chairman Bernanke delivering his semi-annual testimony on monetary policy to the House Financial Services Committee today. Bernanke said reductions of the central bank's $85 billion per month bond buying program are, quote, by no means on present course, end quote, and that Federal Reserve could leave the program intact or, get this, even increase purchases if warranted by a weakening employment situation. He also said that the economy was to perform better than the Feds expect. The central banks could begin to reduce the amount of their bond purchases. Bernanke's last two appearances, including today's testimony, are very much different from what the chairman said on May 22nd, when he said the Fed's quantitative easing program could be scaled back over the next few policy meetings. If you notice, the biggest concern to the Feds seems to be volatility, and they're doing whatever they can, and I would say they're doing a lot to curb the volatility to a minimum. So we may get some inconsistent messages from the Feds in the near term, because we know their paramount interest is to avoid panic and create a bridge for the economy to pick up once again. Technically, the stock market was very quiet today with low volume. The stock market is actually very quiet during earnings season. But since it's the middle of summer, I'm not too surprised. And there's nothing new from Bernanke that we didn't already know previously. Once again, since the stock market is near the high level, I want to see how the transportation sector is going to go. And I'm not seeing anything too exciting. I believe if there was true momentum coming into the market, we would see it here, especially in light of the fact that the market is so close to the highs right now. Keep your eyes on this ETF because it should alert us if the stock market is breaking out to new highs. Looking at the currency market, the British pound gained a bit more ground than anticipated due to a report announcing UK unemployment claims fell at their fastest rate in 3 years this June. I do believe the pound has more to go. And as soon as the pound clears past the 153 level, I'm anticipating a further move up to the 156 level. Where we go from there depends largely on the US and the US monetary policy. I don't believe we will go straight up, so anticipate some additional volatility both up and down in this market for the next few weeks. The Australian dollar was lower in overnight trade. However, futures reversed and traded higher after Bernanke's testimony. Longer term, we expect lower prices for the Australian dollar because the demand for the commodities that Australia exports to China will be reduced based on China's slowdown. Australia has a strong export relationship with China, and China's slowdown is not helping the Aussie one bit. Technically, if you recall, I mentioned a few weeks ago that the Aussie needs time to consolidate after such a strong move down. The market seems to be fairly range-bound at this time, and this is likely to continue till more is known about China's economic slowdown. It's not unusual for currencies to fluctuate between range-bound trading and trending, so we are seeing the range-bound cycle at this time. It may last a while, and if the range gets a bit wider, we may begin initiating range-bound reversal setups on the Aussie within the next month or so. I will update you on this development. The energy market has stalled over the last few days, and is looking for direction right now. I have to say that after the rally that we saw a week or two of consolidation is not unusual. The most important thing I'm looking for is how sharp the sell-off from this rally will be, and right now I'm not seeing it. The strength of this market is surprising in light of the momentum we saw. The bond market keeps moving upwards as anticipated. As I mentioned a few weeks ago, the bond market tends to overreact substantially more than most markets. I don't know why this happens, but it's something I've noticed over the years. So when Bernanke spoke a few weeks ago and began warning that September will be the end of the stimuli, the bond market really sang hard and fast. I was anticipating a correction, at least a short-term one, because the levels interest rates went to were just too high, too fast. Keep in mind, I'm very bearish on bonds, and I'm looking for a shorting opportunity because ultimately I feel interest rates will go up substantially over the course of the next few years. However, right now we're not there yet, and I'm encouraging you to be patient and wait for the initiation of a short position in this market till we rally a bit higher. The truth is, interest rates can't go too much higher right now because the Feds are controlling bond prices through their stimuli program. So right now we're in a holding pattern. Until we have a clear idea of the Fed's schedule, bonds may continue trading in a range between the 128.5 level and the 124.5 level for the next month or so. I would initiate positions only to the short side in the bond market till further notice. Looking at our setups, we triggered DKS for a short position. Make sure you place your buy stop at the 5160 price level, and we will keep you updated with that as well. There's a new long setup on Boeing, and it's an inside day. The ticker symbol is BA. I would enter on a long at 105.52. And if filled, place a protective sell stop at 104.30 area. There are a few more setups to the downside, but we have several positions to the downside, and although they're not correlated, I don't want to have an overwhelming bias towards one side of the market. That's it for today. I will update you tomorrow with the latest. Have a great night, everyone.